Hey, my name's Curtis Lucas, and you're watching Empire Building. This video is big. I mean, really big. I actually believe this will be the most important video I will ever make. We're going to talk about economic stimulus and what it means for the stock market, as well as Bitcoin. We're going to go way back to the flu of 1918 that infected 27% of the world's population and see what effect it had on the stock market at the time. And I'm going to share with you some data that, if it doesn't shock you, will at least give you pause when you think about our global monetary system. As we come full circle over the course of 100 years, and we're even going to dig into a not-so-secret message left behind on the blockchain by none other than Satoshi Nakamoto himself. So I hope you're sitting down, because I'm going to hit you with some facts that I guarantee you haven't seen anywhere else, while you smash that like button for the YouTube algorithm. In the last month, we have been witness to a defining moment in human history, which will have ripple effects that go way beyond the immediate and monumental health and financial challenges that we're facing today. In today's world, we tend to have difficulty keeping up with the changes that are going on around us. And now things are changing so fast that it seems almost futile. In the United States alone, they're looking into a $6 trillion stimulus package to pull America through this unprecedented event. My recent video that I did on Warren Buffett's famous quote, "Be fearful when others are greedy, and be greedy only when others are fearful," was my most popular one to date. And it got me thinking more and more about the events of our past that presented as incredible buying opportunities. And I started to ask myself, what could possibly be different about this one? I mean, not even Warren Buffett has been witness to anything like this, even in his investing career. Warren Buffett was born in 1930, 12 years after the height of the Spanish influenza. The first thing that strikes me when I look at this crash is how much faster the initial sell-off was compared to downturns of the past. And even more shocking is that if you look back to 1918, during the deadliest pandemic in history, the stock market was basically unaffected and was actually rising. This is exactly why you need to be very careful when looking to the past for answers to future events. I mean, think about it. What else could have possibly been happening in 1918? "1918 would be the final year of the First World War. So when reports surfaced about a deadly flu virus, governments all over the world censored that information for fears that panic among civilians and soldiers alike would hinder the war effort. The only country that reported on the virus and provided actual numbers was Spain, because it was neutral in the war. This is what led to the virus becoming known as the Spanish flu, since they were the only ones reporting on it. So needless to say, times were different, and even though the crisis was devastating to say the least, it had little to no impact on the stock market. Not to mention, you were also dealing with a time where trading stocks was not as accessible as it is today. So we're not going to get much insight from looking at the charts. But something else happened at the time that would set into motion a series of events that would actually lead to the creation of Bitcoin. Prior to World War I, all nations had their currencies pegged to gold. We all know that meant they had reserves of gold, so that those notes could be converted into physical gold. It also meant that foreign exchange between nations was possible because every nation had their own ratio of their currency to gold. At the onset of World War I, nation after nation suspended convertibility of their notes into gold, and by the Great Depression began to abandon it altogether. Some nations realized that they could stimulate their economy by creating money and simply injecting it into the banks to encourage lending. Different countries went back and forth on the gold standard for the next little while. But after the Second World War, the 44 Allied nations got together at the Mount Washington Hotel in Bretton Woods, New Hampshire, and entered into an agreement that would be called the Bretton Woods System, that would fix their exchange rates to that of the US dollar. Central banks could exchange US dollars for physical gold at the rate of $35 per ounce. This was only available to central banks and no one else. This worked well for a while, until one day, on August 15th, 1971, Richard Nixon ended the convertibility of US dollars into physical gold by other nations. Later, in 1976, the government changed the definition of the US dollar and removed all references to gold from the statutes. From this point on, the US and all other currencies were free from the bondage of gold. The debate around Bitcoin versus real money has been going on for some time. And people believe that the currencies, like the US dollar that they've been using, have been around for a very long time. But it's only existed in its current form for about 44 years. Now sure, that's 4 times longer than Bitcoin, but which one is the bigger experiment? And which one is more uncertain? I'm going to come back to that in a little bit, but I want to keep this moving so I can come full circle. Okay, so the US dollar has lost 96% of its value since the creation of the Federal Reserve. And save for a period of time during the 30s, it has lost value every year since its creation. Now this sounds bad, but it is actually necessary for economies to grow and prosper consistently. Just think about it. If you know that your money will be worth more tomorrow, then you are incentivized not to spend today. That means that growth in an economy slows down, and this is bad for everybody. Whereas if you know that your money will be worth less tomorrow, then you are incentivized to spend today. This is why the dollar increased in value during the 1930s. People were not spending. So as far as economies are concerned, a certain amount of inflation is a good thing. Now, before half the audience blows their top and leaves the video because I just said that inflation was a good thing, just sit tight while I bring this all together, and you can express your thoughts in the comment section below. Fast forward to 2008. The world has entered the greatest economic downturn since the Great Depression. Governments all over the world responded to this crisis by injecting money into their economies by way of economic stimulus, as well as corporate bailouts for failing organizations who were too big to fail. In the past, governments would need to turn to their citizens to fund major endeavors like wars by issuing bonds and increasing taxes. But now, with gold out of the picture, they can just print new money and inject it into the economy to keep the wheel spinning. Just as we have witnessed in the past, this technique works. It had never been done on the scale it was done in 2008, 2009, but it did work. It is a delicate balance because if overdone, things can spiral out of control. Case in point, Venezuela. In 2014, inflation reached 69% in Venezuela, the highest in the world. In 2015, inflation reached 181%, the highest in the country's history, but it didn't stop there. In 2016, it reached a staggering 800%, and then over 4,000% in 2017. Just when it couldn't get possibly any worse, the currency completely collapsed in 2018 with 1.7 million% inflation. Another example is Zimbabwe, where they minted a $100 trillion banknote that was essentially worthless. But these are extreme examples and would never happen in a sophisticated developed nation, right? Right? Remember at the beginning when I said this was going to be a big video? Now you know why. I'm going to return to try to answer this question at the end of the video, but for right now, we need some more context. So let's go back to the recession of 2008. On a little side note, I hear a lot about people talking about the Fed and how their printing money is going to lead to massive inflation. And this isn't entirely accurate. In 2008 and 2009, a lot of money was printed, mostly in 2009. Inflation in 2008 was 3.84%, but most of that was a result of runaway inflation before the crash. In 2009, it was 0.36%. The whole point of printing money is to prevent deflation, which used to be a normal part of our economic cycles. It was during this time that a person or persons going by the name Satoshi Nakamoto launched a new digital currency that could not be controlled by any one person or government, Bitcoin. And the very first block was mined on the Bitcoin blockchain, known as the Genesis block. Within the coin base of the Genesis block also appears the text, "The Times, 3rd of January 2009, Chancellor on the brink of second bailout for banks." Bitcoin's creator wanted to leave a message for us, it would seem, to serve as a reminder of the motivations for creating Bitcoin in the first place. I decided to dig up that article from the Times to see if it would provide any insights as to what might have been going on in the mind of Satoshi Nakamoto that would inspire him to embed it in the immutable foundation of the blockchain. Like many nations, Britain had just witnessed the largest government bailout in its history to rescue English banks from insolvency by pumping $37 billion directly into their balance sheets. The idea was to prop them up so that they could continue lending to the population, so that the economy could continue to grow. The Bank of England revealed yesterday that despite intense pressure, the banks curbed lending in the final quarter of last year and plan on even tighter restrictions in the coming months. Its findings will alarm the Treasury. The bank is expected to take yet more aggressive action this week by cutting the base rate from its current level of 2%. Doing so would reduce the cost of borrowing, but have little effect on the availability of loans. Whitehall sources said that the ministers plan to keep the banks on the boil, but accepted that they need more help to restore lending levels. Formally, the Treasury plans to focus on state-backed guarantees to encourage private finance. But a number of interventions are on the table, including further injections of taxpayer cash. So just in case you were wondering, did the Treasury do a second bailout of the banks to encourage lending? You bet your ass they did. 9 days later, another $50 billion was made available to the banks so that the government could guarantee any loans they gave out. In the United States of America, this stimulus took place over a number of years, and according to this CNN article, cost a staggering $2.8 trillion. Now, as I always do, I tried to confirm that number using my own research, and I found that the figure is not entirely accurate. It ignores that the $700 billion for TARP was an early estimate, and the total amount that was actually dispersed was $426.4 billion. And it should be noted that this program purchased troubled assets, which the government then owned. By the time the program ended, the government had recovered $441.7 billion, actually earning $15.3 billion in profit. The same was true for the funds dispersed for Fannie and Freddie. Also, the Obama stimulus package was revised to $831 billion. But I'm not going to split hairs over a few $100 billion, am I? Finally, this brings us to today. Only 11 years since the last economic disaster. And yet again, governments all over the world are tripping over themselves to print money and inject it into their economies to kickstart it all over again. Governments have learned that economies recover faster when they intervene and stimulate the economy through various ways of printing money. This tactic is a new tool that was not available 100 years ago, which is why the Great Depression lasted so long. Now we're getting to the climax of this video. So if you're still here, then thank you. And go ahead and smash that like button. It's been sitting there this whole time. Governments are addicted to this new power that they've discovered in the last few decades, called monetary policy. The control they have over their currency gives them this power. Their goal is to control the rate of inflation. The mandate of every central bank is to maintain inflation at around 2% per year to encourage continued economic growth. To be honest, I find it difficult to argue with the logic. So far, it has proven to be functional. But is it sustainable? Have a look at this chart. This is a chart of the rate of inflation in the US since the year 1650. I find this chart a little funny because the Declaration of Independence was signed in 1776. For those of you wondering, the source of this chart was Investopedia, and their source was officialdata.org, who compiled their information from the Consumer Price Index as far back as they compiled data, which was 1913, when they were established. And prior to that, they used data from a historical study conducted by Professor Robert Sauer at Oregon State University. What you can see is that for about 300 years, inflation and deflation were almost mirror images of one another, until the mid-1900s, when deflation was eradicated as a result of monetary policy. This is a new phenomenon that we have never witnessed before in human history. Here's another chart. Have I mentioned how much I like charts? This one illustrates the buying power equivalent of $100 from 1799 to 2019. To further explain, this is how the value of a $100 asset, like say apples, would change over time, or how much it would cost to buy those same apples every year since 1799. Yet again, you can see how it fluctuated mildly until the mid-1900s when monetary policy really started to take over and forced inflation to compound continuously. I posted this same chart on Reddit and a couple of people took issue that it's not a log scale chart on the y-axis. And they're absolutely right about that, because a log chart will clearly indicate what is exponential growth and what is not. So I went a step further and sourced the same original data from that study and plotted it out on a log chart myself. And lo and behold, it only becomes more obvious. $100 worth of apples in 1799 was still worth $100 in 1917. So what does all this mean? Honestly, I don't have a clue.
Okay. Disappointed!
Look, I'm not going to sit here and claim that I know exactly what this will lead to and when. All I'm trying to do is illustrate a complicated subject in a way that we can wrap our minds around and understand that this concept of real money that most people have in their minds isn't even close to reality. And for the first time in a long time, we have a choice to use something different. I mean, sure, we've always had gold, but have you ever actually tried to transact in gold? There is a reason why we switched from gold to paper money in the first place. The bottom line is that our governments have decided that deflation is just too painful for us to handle, so they're artificially suppressing it. Something that was never possible before in human history. Is it possible that this could continue for the next 100 years? Sure, it's possible. But how often has our meddling in the natural order of things yielded only positive results? I will make one prediction though. The bailouts and stimulus will continue. And you know what? It'll work. For the second time in 11 years, our short-sighted human brains will have been reassured yet again that we know how to deal with any threat to our economic salvation. There will be another threat to follow. Who knows how far down the line? But the playbook will remain the same. In fact, there are some who believe that inflation should be 4%, not 2%. Remember that chart that I put up earlier about the $100 buying power? In 2019, that asset was worth about $2,100. At 4% inflation, that same asset would be worth $4,100 just 10 years later. Bitcoin is an experiment, and it still remains to be seen what role, if any, it will play in our society at large. But it still more closely resembles the currencies of our past than this new currency that we're all using today. It is both exciting and terrifying at the same time. My final prediction is this: widespread adoption by the general public will not come voluntarily. In the short term, the power that fiat currency provides governments and citizens is just too great to give up. In the interim, Bitcoin will rise to fulfill a need that is still greatly underappreciated at the moment. When you step back, it seems clear to me that the current system that we're using will eventually fail. The fallout from this will be catastrophic and is not something you want to be around for. But that will be the time for Bitcoin and blockchain to shine, even if it is in some dystopian hellscape of a future. The point is that a failure of fiat currencies is not something you want to be rooting for, unless you're really into those kind of movies. This is why Chamath Palihapitiya refers to Bitcoin as smuck insurance.
Whether you support fiscal and monetary policy or not, it doesn't matter. This is the schmuck insurance you have under your mattress.
If you're not familiar with him, then just search his name on YouTube and watch anything with him in it. I guarantee it'll be worth your time. According to him, Bitcoin is the vehicle that could save his entire fortune, should the worst case scenario actually occur in our lifetime. He says that keeping 1% of your entire wealth in Bitcoin could save the other 99%, should the traditional markets fail. Many interpret this to mean that Bitcoin is not correlated to the traditional markets, but that is not exactly what he was getting at. He was talking about that worst case scenario. What if the entire thing fails? I plan on doing another video about more of his ideas, but this has already gone on long enough. I hope I didn't scare you too much, because that was not my intent. But I hope you walk away from this with a little more insight into what money really is and the not so visible role it takes in your life today. The more you understand money, the more you will be able to use it to build up your empire. Make sure you hit that subscribe button if you haven't done so already, and join me in future videos where I plan to bring you more insightful content that will better prepare you for your financial journey. Smash that like button if you haven't already done it. And now let's get back to empire building.